Well, my next guest says a reacceleration of inflation will keep the Fed on the sidelines for much of the first half of 2025, is diversifying outside of the U.S. for growth. Joining me now, Michael Landsberg, Chief Investment Officer at Landsberg Bennett Private Wealth Management. Michael, happy Friday. So Japan and India, why?
I think what we've got, we still like the U.S. I don't want to say that we don't, but I look at India and the GDP, the growth there is 2 or 3x what we're getting here. We like that certainly more than we like China, for example, simply because they also use kind of the U.S. rule of law. It's a capitalist country, so we think that's a very positive, high tech there, but a lot of growth. Japan's more of it's been kind of dead for a while, and we're seeing a reacceleration. We are a little bit antsy about the election there, so I'm probably not as gung-ho as I would have been 2-3 weeks ago about Japan, but we do want to see some opportunities. We like a position that is short the yen. We think that gives investors diversification, because what we find is investors have kind of gotten into a couple sectors and they're very, very heavy, and we think you need some diversification to kind of smooth the ride out.
Okay, so if I'm an investor looking at, say, the EWJ, the MSCI Japan ETF, and the INDA, the India ETF, two different issues, right? India, that ETF is at about 55. It had gotten kind of knocking on the door of 60, but it's been really running high, arguably that it's expensive. Japan really hasn't broken above the level where it is now. That ETF for years and years and years, and as you said, have been moribund. So why should we trust that there's upward room from here with all of this global uncertainty overall?
I think the story in India is the growth. Obviously, we think there continue to be good GDP growth there. A lot of those names are hitting, kind of all-time highs. It's pulled back a little bit to give you a little bit of an entry point. I think Japan's a different story. We look at DXJ, which is the ticker that's actually Japan but short the yen. That's had a much different performance than the EWJ, because I would agree with you entirely. Owning the stocks when the yen's gotten crushed hasn't really helped performance. We wanted to have something that be able to give you that diversification. Again, it's an area that we think is some value. The problem right now in some parts of the United States market is some valuations are extended. So we look for some places, whether it's in Asia, whether it's in South Africa, the UK, to give us some diversification that isn't kind of priced to perfection, which a lot of the U.S. market is.
Okay, closer to home, 3 stocks you like: Baker Hughes, Copart, Adobe. Let's start with Adobe because I like tech. There are questions about when AI really starts to translate into measurable growth. Where do you see Adobe in that process?
I think Adobe's got kind of unfairly penalized for not having an AI monetization strategy right away when quite a few others don't have one either. They just announced their Firefly, their AI video program. But I look at the stock and think they've done really well for a long period of time. The stock's down this year. And it's a good entry point to be able to come in. Whether it takes them 6 months or a year, they're typically a more conservative company. I think their AI is going to be a good hit with corporate, simply because they're going to look at data images that aren't going to have copyright issues or some of the things that you run into with AI. So I think it's a good story. It's just taking a little bit of time to kind of get going. What I like about it is it's an attractive entry point. It's one of the few places in tech they've got a consistent. Other software programs have been very, very good for a long time, as you know. This AI is a new thing, but they've got penalized because it's not out making money today.